Hello, my friends. I'm a money trader from India. Picture this, you're batting on a cricket field. The fielders are closing in, and you know the boundary line, and your goal is to hit beyond it. But not get caught. Trading it exactly like this, there are boundaries in the market too. Places where the price bounces back or breaks through. These boundaries are called support and resistance. And if you don't understand them, you're playing the market blindfolded. So, in every chart, there are invisible walls. So, today we are giving into a fundamental concept that can transfer your trading journey: support and resistance. What are support and resistance? The boundary lines defines the limits of the field. Similarly, in trading, support is like the lower boundary, a price level where buying interest is strong enough to prevent the price from falling further. Resistance is like the upper boundary, a price level where selling pressure prevents the price from rising higher. Let's take an example you will relate to. Imagine you're buying onions at the Sabzi Bandi. Last month, onions never went below rupees 20 kilograms kg. Every time price dropped, shopkeepers refused to sell cheaper. That's support. But they also never crossed rupees 40 kg. Buyers stopped buying about. That's resistance. In trading, these levels are psychological battleground zones where buyers and sellers fight to control the price. This part is powerful. You don't need fancy tools, you just need to observe. Identifying these levels involves analyzing historical price data. Here's how you can do it. Historical highs and lows looks for price levels where the market has reversed direction in the past. Trend lines, draw lines, and connecting successive higher lows for support or lower highs for resistance. Moving averages. Commonly used average like the 50-day or 200-day can act as a dynamic support or resistance. Fibonacci retracement levels. These are horizontal lines that indicates where support and resistance are likely to occur based on Fibonacci sequence. Pivot points calculated using the previous day's high, low, close pivot points can help identifying potential support and resistance levels. Okay, let's go to our pocket option platform, and remember to having the proper internet connection and the device. Here you can see indicators and drawing. First of all, select the charts candle obviously for 1 minute, and then we need to go for a drawing. We do have plenty of options, but we're gonna go with the horizontal line. And first we're gonna place the maximum particular the amount when it up high. So I'm gonna place it here. As you can see that this was the maximum it went bought. The other line we're gonna place it down, going forward at below. We can actually change the color as it presents that it's going for the sell. So drag it down. Yeah, you can go it over here. Okay, and we can also place it for one more. As you can see that it has been reflected toward downwards. So let me go ahead. Okay, don't forget going on drawing and the horizontal line. So this is very subjective when it comes to like putting the third line, but obviously as we are going for 30 seconds to 1 minute, you can actually place it over here. Here you can clearly see that that was the maximum bounce it for a moment. So this indicates helps you in order to guess the buy and sell. Remember, this is a support and resistance band for you, that the places of the market goes up and down, and you clearly can see that there is a up and down, and to see it bounce back, and it's still in the middle of the line that we just created. So as we can see that we still have 25 seconds, and we can close it under the line. So that's how it's very beneficial regarding for having those setup. It's clearly helps you to understand and make you in a being in a flow. So you can also integrate with the other bands like Bollinger Bands, RSI, MSCD. This is just like stands for support and resistance. You clearly have a view how does it look like and everything has been set up properly. Any more questions? Do let us know. So now you have learned how to spot key support and resistance levels. You don't need to be a pro or use expensive software. Just clear observation and a bit of practice. The more you mark these levels, the more naturally you will start seeing patterns others miss. But identifying them is just the beginning. Now, let's talk about how to actually trade using these zones. Pro tip, combine methods. Don't rely on just one. Now comes the action part. You have identified levels. What next? There are three solid strategies. First, range trading, perfect for beginners. Wait for the price to approach support and then look for a bounce. Buy near resistance and look for weakness and then sell it. It's like buying at DMart discount and selling at MRP. Second, breakout trading. High reward, high risk. Price breaks the ceiling resistance with strong volume. That's a breakout. Enter on confirmation. Remember, not every breakout is real. Many are fake outs, bull trap. Third, retest entry the safe style. Wait for the breakout and then wait again for price to retest the broken level, now acting as opposite. Resistance becomes support. Support becomes resistance. Enter only when the retest holds less stress and more confidence. It's also very important to know about common mistakes that cost real paisa. Avoid them. Blindly copying telegram calls, always remark levels yourself. Overtrading near key zones and wait for confirmation. Forgetting economic events, budget day, RBI speech, news break, resistance like paper. Being impatient. You don't need 10 trades a day. You need one good and one near a clean level. Let's talk about Nifty 50. In February 2024, the 21,800 level acted as a monster resistance. Every time the price touched, sellers entered, but once it broke with a strong volume, it zoomed past 22,200 in 2 days. Then it came back 21,800 tested and zoomed and boom. It became support. This isn't a theory. This is how smart money operates. Their defense levels like soldier, you just have to watch and follow them. So next time you open your chart, don't just stare at the candles. Draw the boundaries, make your support, and draw your resistance and start trading like a cricketer who knows exactly where the fielders stand. If this video helped you, like it. If you learned something, comment below your favorite tip. And if you want daily levels and signals, join my Telegram channel. Link is below. Enjoy and happy trading.